Hi and welcome back to Cheeky Crypto. My name is Nick and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what I would expect to happen next. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe? If you tap the bell and select all the notifications, you will not miss another video update. Above and beyond these things, though, make sure you do join us down in Discord. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video. We'll try to keep it nice and brief. We'll start things off. I pushed the right button. We'll start things off here with Bitcoin paired up with USDT Binance 1 hour time frame. Okay, so this is like the micro movements. As you can kind of see, we pulled back, we pushed up, we actually tapped into the range that we were talking about yesterday. So we were talking about coming up here to the 37,428 upwards towards the 39,339. Obviously, we tapped just into here a little bit with that high of 37,526. We got in rejected. We are on at the moment the 50 SMA as potential support for us. There's a few interesting things going on in here, though. Over this weekend, I'm not so confident. Let's go ahead and actually bring this down from our 1 hour time frame into a 5-minute time frame. And the reason for this is I want to see what is going on with this particular move right here. It actually doesn't look terrible, so I'm just going to take a quick look and see what's going on from here. So we have this little move to the downside. We then have this little bounce and then this push down here. You can see here it hits 1.618, bounces up and then pushes down again. This is a 5-wave count. Let's take this back up into our hourly. And so my concern here was that we have a little 1, 2, kind of 3, 4, 5 situation going on. It's really hard to see it on the hourly, but that would basically mean that we have an A wave coming down here, in my opinion. We'll bounce upwards and then have another kind of 5-wave drop. So I don't think we're necessarily done over the weekend here. It might just be a continuation pattern here before we continue this little move upwards a little bit higher. So it's not overly too distressing or anything like that, but it does look like we still have a little bit more to the downside. Probably grab this fair value gap. That's that green area that you see there before we kind of then start this continuation. So over the weekend, expect a little bit of volatility, probably today. A small move upwards, small move downwards, then carrying on upwards in its continuation. Okay, so I'm not too concerned about what's going on there, just a little bit of interest going on the hourly. Now, we are, of course, oversold on the 1 hour and 4 hour time frames. So again, that's going to tell us that we're probably going to see some momentum shifting around a little bit. We throw some volumes in here. You can see the volumes are just really not where they need to be. So I'm not too confident there. We've got a little bit of bearish divergence, which is when we saw this move to the downside. So again, nothing from that point of view. And yeah, so for the most part, not too bad. Take this out into the daily. You can still see that we're inside the 5th wave movement. I think we've done the 3rd wave here. We still have the 5th wave to go. So I'm not thinking that we're done with this push upwards just yet, but I think we're getting there, right? So we can see here, this is a 335 pattern, and we are going to be looking for a move to the downside eventually here. I think we're getting closer to it. We're just not there yet. Now, when we take a look at this from a daily standpoint, we can obviously see that we are close to the overbought, but we're not overbought just yet. We are overbought on the weekly and the monthly time frame, so big macro levels are overbought, so we are going to be looking at momentum shifting downwards. Now, from our volume point of view here, you can see a little bit of volume coming in, but ultimately volumes are lower than they were previously. For example, we can see if I draw a trend line here, volumes were lower on the 9th of November than they were on the 24th of October. And of course, we have divergence in that regard because we have a higher high in terms of price, right? Price on the 24th was sat up there at a high of 35,280, and then on the 9th, we actually have a high of 37,972. Okay, so we know that there's divergence in that because we have higher highs, we have lower highs on volume. Okay, so you can look at divergence across multiple different things, including the stochastic RSIs. Now, you can see here we have bearish divergence as well, but this is yet to play on out. So it's going to be interesting to kind of see how that plays out on this daily time frame over the coming little while. Okay, so for now, it is what it is. It's going to be quite an interesting one to kind of see how it plays plays out. But over the weekend, I'm still expecting a little bit of volatility. We're still looking for that fifth wave high. Once complete, we'll then start talking about those moves back to the downside, as I've been kind of talking about on those bigger macros, which brings me to the weekly time frame. Here we have the ascending wedge. Again, I'm looking at this in a bearish light because we do have the very common things that we often see here, which is an overlapping structure. Okay, so when we have an overlapping structure, it is of concern for us, and let me show you why. Okay, so under an Elliott wave theory concept, or just kind of like basic rules, we have a what they would call a trend-based pattern, which would look like a 5-wave structure like this. Okay, and then you would have something that would be a very corrective pattern, which would look more like this, right? You'd have a W, X, Y, X, and Z. Okay, and the differences between these two are quite simple, right? You have a wave 1 here and a wave 4, and basically that wave 4 does not go lower than the wave 1, right? Over here we have a W wave and an X wave, and you can see that the X wave goes down lower than the W wave, right? And so what you have in essence here is what is a corrective pattern versus a trend-based pattern. Okay, overlapping structures are not trends, and patterns where there are no overlaps are trends, right? At least from an Elliott wave theory point of view, it keeps it really kind of simple, right? And so what does that mean for us? Well, we can see here that we have nothing but an overlapping structure. This is very similar to where we were back in 2022 in June, where everyone was calling the bottom and we just didn't have the structure for it. So for example, you can see here we had a peak. Okay, we then had another peak, and then we had this move to come to the downside. This went down lower than this high over here. We then move up, and then we come back down again. And again, we come down lower than the previous peak. And so what this essentially means is you end up with this overlap pattern, and that overlap pattern right inside here is indicating to us that we're not in a trend-based pattern to the upside. Although it is great to see price moving to the upside, it isn't really indicative of a strong market. Now again, you can then take a look at your volumes, and if you zoom out of here, you can see that on this chart here, this is a bit step, right? So I know a lot of people were arguing with me saying that the volumes are down just because it's Binance and the SEC are going after Binance, or Binance have changed their fee structures. That's all well and good and everything, but here on Bitstamp, you can also see the volumes are just non-existent. They're not as bad as they are on Binance. You can see Binance's volumes are really non-existent, right? They've really come down to nothing. And this isn't just because of the SEC. This isn't because of fee structures. Binance is still the #1 trading platform in terms of volume being pushed through every 24 hours. So it's not that people are not trading on Binance. It's simply that there isn't really a lot of demand for Bitcoin, right? And so when we take a look at these things, it's important that we understand that we don't just kind of stick into our emotions and say, you know, we're bullish because, you know, of Bitcoin spot ETFs, and you're speculating on those being approved imminently, or you're speculating on Bitcoin halvings and things like this. Ultimately, the data is quite clear. There really is a lack of interest, and the reason that we see price moving to the upside, in my humble opinion, is all to do with market makers. I mean, I look at who has the most to gain from Bitcoin's price movements to the upside, and well, market makers, exchanges, projects, and generally these individuals are the ones that are actually the ones that are making significant amounts of money on the backs of these movements, right? It's not retail that's making the significant cash here. You've got to bear in mind that FTX are looking to liquidate their assets. Is it a coincidence that we see price moving up so rapidly whilst there is a huge sell-off event about to happen during that bankruptcy? So I just wondered to myself, are retail really not paying attention, or are they literally just looking, because it's been so negative in the crypto space for such a long time, just looking for any reason to be bullish on the market? Now, it's great to see that Bitcoin's pushed up this way, but I don't think it's going to be sustainable. It's not sustainable under the fact that there isn't really a lot of interest in Bitcoin from that volume point of view. There isn't really a lot of justification for the moves to the upside. We have a lot of overlapping structures, which is never a good sign. We have higher highs, higher lows, which do have a tendency to want to break on down anyway in their nature. And we're overbought on the monthly, weekly timeframes and almost on the daily timeframes. To me, this tells me that we're going to see a big pivot in the price action here for Bitcoin, and we're likely to see Bitcoin moving down. Now, obviously, as I said before, My expectations are a $20,000 to $21,000 range. I want to see what happens there. And that's specifically just because there's a CME gap there. It would make the most amount of interest to want to gravitate down towards it. But of course, there are areas of support to be found on the way down, right? We obviously have $30,000 to $31,000 support levels. We have $24,000 to $25,000 support levels before you can even get to the $20,000 to $21,000 CME gap. So there's lots of things that can change between now and then. And obviously, I'm just kind of giving my thoughts and opinions here. I know that when the Fed do a pivot, historically speaking, a stock market has a 50% correction to the downside. And I think that's going to also fuel a bit of a downward move in the crypto space. We're already seeing profits being taken from large wallets as well. This is all available at 𝗕𝗘𝗪𝗀𝗖𝗋 on our membership website, where we do have on-chain metrics so you can track, what size wallets and what they're doing. So we can see, for example, there are large investors kind of coming out of their altcoin positions. Chainlink's a clear example of this. Chainlink with over 100,000 Link, they've been decreasing quite rapidly over the last 30 days as Link has pushed upwards. And of course, there's a buyer, there's a seller, and the sellers are obviously the larger institutional level investors, and unfortunately the buyers are the retailers. And so it's really interesting to kind of get a good idea as to kind of where we think things are heading here. Nothing is a guarantee, of course, but for me, I think we are likely to see moves to the downside over the next few months or so. Now, with everything going on, we can only hope that, Bitcoin spot ETFs are approved, and that pure hopium could be fantastic for the price action, right? And I'd love to see that. Same with the Bitcoin halving event. It brings in hopium. It doesn't really have any logical explanation as to why people are so bullish on the halving event. Historically, yeah, I understand it, but going forward, we already have 19.5 million out of the 21 million in circulating supply, which means you're really only halving the 1.5 million that is left. And so it really isn't going to have a huge impact to the supply demand, and the supply demand is what drives price. So if we were to really think logically, the Bitcoin halving event isn't really going to be a big driver outside of pure speculation. And obviously it's really easy to kind of explain. So it's an easy concept for people to understand that a Bitcoin halving event potentially is a bullish piece of news, but realistically speaking and logically speaking, it doesn't really have a huge impact on the supply element anymore, and therefore not a huge implication to price movement. So understanding these things are quite important. I think ultimately, though, I think the market could be shaken heavily if Bitcoin spot ETF is delayed again, or even worse, rejected. I wouldn't put it past the SEC to reject it and then have BlackRock, for example, and go and appeal it before it gets approved. I wouldn't put it past the SEC and the clown 𝗕𝗓𝗪𝗀𝗪 doing that. It would probably be the last thing he does. He really knows it's probably going to be fired anyway. So, it's one of those things. You can't rule it out, right? So it would be great to have it approved in January. I'm not sure about that. If anything, maybe we'll see another delay. It wouldn't make sense for a Bitcoin spot ETF to be launching at the turn of the year. But, the approval and launch are two very different things. Okay, so getting it approved and then actually launching a Bitcoin spot ETF could be, several months apart. So again, we'll see what happens here, but speculation is one thing, facts are another. So I'm looking at the data here and I'm not really liking what I'm seeing from the price action, from the overlapping structures, from the volume side. And really what's really pushing the market right now, in my opinion, is literally manipulation from market makers to drive price higher so that exchanges that are in trouble or were in trouble pre-2023 can liquidate assets and get out of trouble and basically start bankrolling their operations at the expense of retail investors. But let me know what your thoughts are on all of this down in the comments below. I'm going to leave the video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.